push up, but then come down, usually on the same week. Remember, we're looking at a weekly bar. So here we see the market pushed up, closed down. Here the market closed on the high, but the very next week, the market pushed up, closed down, market pushed up, closed way down. Okay? So now as the market starts to reverse, you can see here once again the market pushed up and closed down, right? Closed down off of the high is what I'm saying. Next week, the market again pushes up and closes down, but look what's happening on the low. The market is not pushing to new lows. That's your key that, well, maybe this market is going to go up. Okay, so let's take a look at what happens over here. The market's reacting here to the moving averages, reacts again here to the moving averages, pushes up. Now is when we have the established trading lane. So now we've got some boundaries of where we think the market's going to go. So here we see the market reacts right around the moving average again. We're also coming into the old highs. Market is at the moving average, so we're going to look. Does it react? It does. Comes back down. Now look at this. What is it doing? Closing on the low. What does that mean? Well, it means if the market breaks this low here, then we're going to anticipate that the market is going to move down to this support zone. And then below that, to that moving average line, below that, to this line here. Okay, so we've got a plan. What happens? Boom. The market does it all. It breaks to the downside, comes down, breaks this support, comes down and touches all the way down to this trading lane line. Okay? Now the next week, same thing. Comes down, touches the trading lane support line, starts to move up. So what are we seeing here? The market is pulling up off of the bottom. What does that indicate? It indicates that there's support in this general area and that the likely direction now is up. Where's the market going to most likely go if the direction is up? If it breaks through this resistance, it's going to these old highs. So 97.70, 98.60 is probably where this thing is going to go in the longer term. So this is this current week. So now we have a plan for next week. I've got a sheet of paper in front of me. It's a blank sheet of typing paper. At the top I have March 19 through the 25th. So what I want to write is a general plan or a reminder of what's going on. So I'm going to write market. Like I said, I want to do this somewhat real time. Pulling off of lows at trading lane, and I abbreviate that TL. I mean, you'll get these abbreviations as you go along. So market pulling off lows at TL, upside target likely at 1.9770 dash 1.98. I'll do 80, and that's going to put it right up here above these two highs. So I've got basically a target now from this high to above this high. Okay, that's going to be my possible target. Watch for momentum, and I abbreviate that MOM, M-O-M. Watch for momentum to downside, possible, and I just abbreviate that POSS, possible, oh, excuse me, I just had lunch, possible breakout of trading lane. Okay, so there we go. Now, if it does break to the downside here, where can it possibly go? Well, remember, the market likes logical points. Okay, it likes to go to past lows, past highs. So remember, this area, which is, whoops, wrong tool, which is going to be roughly from these highs